Hi, I'm Sachikera. In this video, we will review Chapter 1, Managerial Accounting. In a previous financial accounting course, you learned about the form and content of financial statements for external users, such as shareholders and creditors. These financial statements are the main product of financial accounting. In managerial accounting, our focus primarily is on preparation of reports for internal users, such as managers and officers of a company or a business. Managerial accounting provides tools that help management make decisions and evaluate the effectiveness of those decisions. In Chapter 1, Managerial Accounting, we will cover the 4 learning objectives listed on this slide. So let's get started with learning objective number 1. Explain the distinguishing features of managerial accounting. Managerial accounting is also called management accounting. It is a field of accounting that provides economic and financial information for managers and other internal users. Managerial accounting applies to all types of businesses: service, merchandising, and manufacturing. It also applies to all forms of business organizations, such as proprietorships, partnerships, and corporations. Managerial accounting is needed in not-for-profit entities, including governments, as well as in profit-oriented enterprises. Management accountants are responsible for cost accounting, which is collecting and reporting of costs to management. Managerial accountants are also responsible for strategic cost management. That is, they help management evaluate how well the company is employing its resources. Managerial accountants now serve as team members alongside personnel from production, marketing, and engineering when the company makes critical strategic decisions. Comparing managerial and financial accounting. There are both similarities and differences between managerial and financial accounting. Let's first look at the similarities. Both fields deal with the economic events of a business or a business transaction. Thus, their interests overlap. For example, determining the unit cost of manufacturing a product is part of managerial accounting. Reporting the total cost of goods manufactured and sold is part of financial accounting. In addition, both managerial and financial accounting require that a company's economic events be quantified and communicated to interested parties. Economic events, for example, your company might rent laboratory space, take a loan from the bank, or sell inventory. The key is that in these transactions, something is gained and something is given up. Now let's review the differences between managerial and financial accounting. Primary users of reports. In financial accounting, we produce statements for external users such as shareholders, creditors, and regulators. While in managerial accounting, we focus on producing reports for internal users such as officers and managers. Types and frequency of reports. Financial statements are generally generated on monthly, quarterly, and annual basis, while internal reports for managerial accounting can be generated as frequently as needed. Purpose of reports. For financial accounting, the purpose is general purpose, while for managerial accounting, reports are generated for special purpose or for specific decisions. Content of reports. In financial accounting, contents within the reports pertain to business as a whole, And that's the reason it is very aggregated, very high level reporting and highly condensed. The reporting is limited to double entry accounting and cost data. And for sure, we have to follow generally accepted accounting principles. Now, in contrast, for managerial accounting, the content of the reports, it pertains to either a subunit of the business or a location or a site or a specific product line of a business. Hence, the content of the reports is very detailed. It certainly extends beyond double entry accounting to any relevant data. And for the contents within the reports, the only standard that we really need to focus on is how relevant the information in that report is to the decisions that we are going to apply that report to. That brings us to the last feature, which is verification process. We definitely have to get our statements audited by a CPA, a chartered professional accountant for financial accounting. While remember, for managerial accounting, we are generating reports for our internal users, which is the managers, the directors, the officers of the company. And hence, for that reason, we do not require any independent audits. Now let's put our newly acquired knowledge to work. In this, let's review question number 1. All of the following are distinguishing features of managerial accounting except internal users, independent audits, reports pertaining to subunits of the entity, to provide special purpose information. Great job, everyone, if you selected B, independent audits, as your correct answer. This brings us to the end of learning objective number 1 for chapter number 1, managerial accounting.